Well, I wanted to introduce myself. I am Tambra Jenkins, and I am the mortgage queen. And I wanted to get this going just because I've been doing a lot of measures on doing a lot of social media on what is called house hacking, and I thought it was very important to do a Q&A and kind of talk to people about what that actually means, because a lot of people are having troubles, especially with California medium house prices, getting into something, especially new home buyers, right? With the interest rates, with both of those put together, your payment's pretty high and it's kind of scary. So I wanted to dive deep into what is called house hacking, and we're going to talk a lot about that, and we're going to go through those things and how you can go about doing it. It's super popular once you know, and once you find out, it's going to be exciting for you. It's a great future investment moving forward. So, I asked who you guys are watching from. We got Sacramento, we got Folsom, we have some Roseville, we got some Bay Area people. Um, so I'm going to talk about what part living in one part of the property while we're renting out the other. That's where we're going to start with. What does that mean, really? Well, you're looking at more like a duplex, a 2-unit property, a 3-unit property, a 4-unit property. It's duplex, triplex, or fourplex. Even an ADU. So there's a lot of properties now that have ADUs, and you can rent out those as well. You can also rent out your room specifically and use that as income as well when you're buying a property necessarily. And what I want to talk to you about is what rental income can do to help offset your mortgage. That's important. And how we start with that is when you're purchasing a duplex, if we purchase a duplex or a triplex or a fourplex compared to a single family residence. So let's put it into layman's terms. So you have a home that you can buy, let's say is 400,000, and it's a single family residence. We have to qualify you based on that purchase of that home without any rents that are associated with it, because it's considered a single family residence. So you have to qualify for that mortgage all by yourself for a $400,000 payment. So now what I want you guys to think about is when you have a duplex or fourplex or with an ADU on the property, you can now utilize, you can live in one unit and you can rent out the other unit or the other unit and the other unit, let's say up to 4 units, right? And you're allowed to use future income to qualify for the mortgage. And what that means to you is, let's say you have a duplex at 600,000, and let's just say that the mortgage payment is 4,000 a month, and it's a fourplex. You could rent out the 3 units for, let's say, 2,000, because the units are typically 2-1s. That's what you look for. That's what I look for when I'm going and buying my investment properties. So a minimum of a 2-1 or a 2-2, and you can rent those out for about $2,400 in this area. And in Oakland, I do a lot of properties in Oakland, duplexes, triplexes, and fourplexes. It's super big over there. And those rent out for about $3,600 for a single unit. And think about your mortgage. So if your mortgage is 4,000 a month and you're renting out the other half of the property, they're paying 2,400 of your 4,000 mortgage. So they're paying more than half of the mortgage. And you can use that also to qualify when you're looking at your debt to incomes ratios when you're purchasing the home. So what I want you guys to do is I want you to see about the second pass are, you don't need to have 20% down when you're purchasing these properties either. If you're an owner occupied person in these properties, you only have to put down as low as 3.5% down on a duplex, fourplex, or triplex. Now, what that means to you is it's because you're living in the property. If you were not living in a property, the investors would have to put down 25% to buy one of those properties with a higher interest rate. And you as an owner occupant get the lower interest rate because it's owner occupied, right? So you don't need 20% down to get into a property. You don't have to be rich. When you think investors, people buy these fourplexes and are like, wow, I would love to get something like that. Well, you don't have to be rich to get something like that. Okay. And it's not just for investors. So now the financing options, there's ways to finance it. There's FHA, there's conventional, and there's VA. Okay. You also have down payment assistance. Down payment assistance doesn't go with duplexes. There's certain types of down payment assistance that do, but most of the time they don't. But the duplexes right now, you can get an FHA loan with 3.5% down. You can get a conventional loan with 5% down and a VA loan with 100%. You don't need any down payment at all. It's 100% financing. Now, there's owner occupancy requirements. So you would want to live in the property for at least a year to consider it an owner occupied property. So that's important, right? So you can start off by being an intro. Let's say you want to start out by buying properties and you don't know where to start, right? There's a lot of young people out there that don't know where to start, and they don't think it's really expensive to buy a single family residence, and it is really expensive. Yes, minimum down, but you still have to afford the mortgage, right? And then when you rent it out, if you put less down, the rent may not offset that mortgage payment. So that's why buying multi-unit properties is so turnkey for the beginner investor, right? So you start off, you don't have to be young to do this. You can be a grown person in their 30s or whatever and decide, okay, I want to start. I'm going to buy a duplex, a triplex, or a fourplex, and I'm going to rent in one unit. I'm going to stay in one unit and rent out the others, and it's going to pay my whole entire mortgage. I mean, that's a win-win. Then you live in it for a year, and then you move out and you rent out your unit. Now look at that cash flow you're getting, right? Then you start all over again and buy another one. And so they just start stacking up, right? So that's how you get what are called doors, right? So that's really exciting. Now, when you're qualifying, let's talk about qualifying for this, right? So I talked to you about what type of loans they are. They're 3.5% down for FHA, like I said, 5% down for conventional, 0 down for VA, right? Now, how do you qualify for this? So what does happen is I get your income documents, or you give your loan officer, and they have to be very good at this, okay? A lot of loan officers do not know how to package this, so it's really important to make sure you ask the right questions. Do they know about rental income on duplexes? Make sure they do. So when you have your income and you situate it a certain way, and then you use future rent on the unit. So let's say you have $4,000 a month in income that we can use, and then you have a 4-unit property, let's say, and 3 of the units get rents of minimum of $2,000 each. We'll make it simple. So now that's 6 and 4. Now you have $10,000 of income that you can use to qualify to buy the duplex, triplex, or fourplex. Are you following me? So that is the beginning of that. Now, how do we figure out what rents to use is what a lot of people ask, right? So you're getting the loan. Who's the one that decides the rents that you're going to use? Well, what happens is when you get into contract and you get it submitted to the bank will then order an appraisal. and that appraisal will automatically come in with a certain report called a 1007, which is a rent roll on the property. And the appraiser is the one that looks at the area, and they're able to determine the future possible rents in those units. So that's how that works. And then the underwriters take that information, and that's the number they plug in to qualify you for the property, right? So how have you guys heard about house hacking? Anybody out there? I wish I could see my screen a little bit better. Let me see if I can open it up a little bit. Let me see. Let's see here. So I have some questions. It looks like, let's see. I have, let's see, Chris. I am looking to buy a home. First time home buyer here. What are the first steps? Okay, the first steps are call the loan officer. That's their first step, is to pick up the phone and call your trusted loan officer. That loan officer will guide you to the following steps on what to do. And then the next step would be to pull your credit. And typically I tell my clients to start off with annualcreditreport.com. And you can find all this information. If you follow my YouTube channel, if you subscribe and like, that would be great. It's really great for me. But yes, call your trusted loan officer, ask them that question. They will pull your credit or send you somewhere to pull your credit, and then they will ask you for your documents. But the biggest thing is the fear, right? Is the phone call. Do not be afraid to pick up the phone. You just pick up the phone, and you'll hopefully get somebody like me. I don't know, but somebody who's going to be gracious and all that and give you the time, especially first time home buyers. It's very good to handhold them. I mean, they're new, they don't know anything. They're looking for you for guidance. And so, yes, that's a very good question, Chris. Let's see what the next one is. I answered that. Can I use projected rental income to qualify for a loan? That is an excellent question. You already had that, and yes, you can. The projected rental income is from the future rents of the units when you buy the fourplex. Yes. Can I use money from my retirement account and other investment account for the down payment? Absolutely, you can. Your retirement account, you're allowed to. Another investment account, yes, any of those things are considered seasoned funds. So there's no, you can't use cash, right? You can't say, oh, I have some money and I had it in my mattress and now I'm going to use that. That's the only thing you can't use. So if you're looking to buy a home and you're thinking a 6-month mark, 3 to 6 months, make sure you put your cash in your bank. Make sure it's seasoned at least 60 days to purchase a home, okay? Otherwise, you may need to do what are called gift funds, and those are allowed. You can do 100% gift funds when you're buying these duplexes, which is really good. All right. Oh, looks like we have someone else from Roseville. Welcome. It's Miss Clover. Oh, that's a great name, Clover. Let's see what else I have going. Can you use equity in your home to buy another home? 100%. Yes, you can. I get these calls all the time, and I actually do these loans all the time. And they're very popular, especially right now. They're considered, there's equity lines of credit, and then there's fixed loans of credit. And so these are, the fixed loans of credit are actually becoming more popular now because of adjusted interest rates. So people are favoring more of the fixed loan instead of the adjustable loan because those get kind of scary. So yes, 100%, you can use the equity in another home and purchase a duplex, triplex, or fourplex. And you can also buy it owner occupied. 100% you are allowed to. Let's see. Gianna, if I move out after a year, will that affect my loan? No, it will not. Just as long as they really want you to make sure it's owner occupied. right? They're not like they're not the mortgage police though, but it is really important, to know going in that 12 months is the reasonable time for a lender, because they dislike it if somebody is not moving into the property. Okay. Let's see here. Another question. Oh, what's the great question? What's the minimum credit score on the purchase of a duplex, triplex, or fourplex, or any home, for example, single family residence? So a minimum credit score is 620 for conventional, and 620 for FHA. You can also don't have to have a score to do an FHA loan. Actually, I've done several of those no score FHA loans. All right, so there's other ways of getting you a home without even having a credit score, believe it or not. Okay, but for a duplex, I would say 620 is a score that I would recommend for that. Perfect. I answered that question. Was ideal credit score to get a home? Yes, there you go. Right now we have what is called the Vantage score. Not all banks use Vantage score and Vantage, and there's credit score and there's Vantage score now. It's coming out to where they go after the Vantage. The credit score is what we see normally, the typical credit scores where it's based on the home or based on anything but credit card scores, right? So if you go onto Experian or something, you can see you have different scorecards. And now you're allowed to use what is called the Vantage scorecard. And that will typically get, a lot of times I'm seeing my clients get a higher credit score to be able to qualify for a better rate when you use Vantage score. Not all banks are using that yet. So you may want to reach out to me and ask me that question as far as where you can go and sort of like that. Because if you have on the benchmark, let's say you have a 600 and you have a benchmark like, oh, I don't qualify with the 600. Well, you don't necessarily know that. You would need to be pulled. Your credit report would need to be pulled. And I can pull what is called a Vantage score. I have seen where they have jumped up a minimum of 40 points. Now, all of a sudden, my client can qualify for a home loan because they went from a 600 to a 640. It's happened to me several times. It's happened in the last 4 months because that's when it started. So it's very exciting that we have that opportunity to give people. So good question on that one. Let's see here. What's today's interest rate? Is it fixed or adjustable? And what's the APR, not just the interest rate? Great question. Okay, the interest rates. So I'm not allowed to quote interest rates, but I mean, I can, but they're going anywhere from FHA right now is below 6. So I can give out a below 6 interest rate with FHA. On the conventional side are higher. So right now they're not the greatest, and we're looking at anywhere from a 6.25, 6.3, 6.5, and that all depends on your FICO score, which could be your FICO or Advantage score. Okay, the APR would mostly mean if there's points being added to get that rate. So that's important. So when I'm quoting you a rate, I would always tell you if there's a point to be determined. So at that, when those rates I'm giving you, the APR is even. Okay. Let's see here. Are there any other down payment assistance or closing cost assistance available in the greater Sacramento area? So yes, there's down payment programs that we use called CalHAFA. It's a California state program. There are other programs too in the county, let's say Placer, Sacramento, Elk Grove, Sacramento County. Those typically go really quickly. They're released typically in the beginning of the year, and then they run out of funds. The CalHAFA program doesn't run out of funds unless it's the DREAM program, which is not out yet. They already went through it in March and they ran out of funds in 2 weeks, but there's still down payment assistance. I do those every day, and they give you 3% and 3.5% towards your down payment, and they can give you closing costs. The word give is not a real word because you do have to pay it back. It's a private lien on the back end of the note. What that means is you don't have an interest on it. You have a simple interest when you have to pay it off, but it is due and payable if you refinance or if you sell the home. Okay. Good question. Do any of these programs have income limits? Yes, Cal HAPA has income limits, but it's not what you think. So you can have in certain areas, I'll just explain. The income limit is 133,000 just for Contra Costa County. That gives you an idea. Placer County is a little less, but it's about but Contra Costa County is 133,000 for a low income borrower. So you can buy a lot of a house with 133,000 and get down payment assistance. I do them all the time. So very good question. All right, let's see what time it is. I don't want to go over. It's 7:23. Let's see, do we have any other questions or anything like that you guys can ask? Let's see, what document, do you have any programs? Okay, I have that. What documents do you need to get pre-approved? Okay, very good question. I love all of these questions. And I'm going to refer you to my, I'm going to give you this 1 second to my emails and stuff like that. Let's see here. Here, I'm going to give you my phone number. There's my phone number, everybody. And that way you have that. And let's see. And then there's also my website. So here's my website. Kind of take that in. I'll put that in the chat. And then we're going to make sure you put this down, call or text me, and feel free to reach out so I can answer those questions. When it comes to your documents to turn in, it matters on a few things. So whether you're a W-2 employee or you're self-employed employee, okay? That would determine the list that I gave you, which is a very small list, by the way, especially if you don't own a property. Let's see here. If you guys can please like and subscribe my YouTube channel or whatever channel you're on. But if you really can go to YouTube, because this is the platform I'm using, and it helps me a lot so I can make more education videos for you and put them out. Okay. Let's see here. Anything else? Let's go back to the comments. It looks like we have 3 more. Wow, this is fantastic, you guys. Okay, how do you get in touch with me? Yep, there you go. 916-410-4430. That's my phone number, you guys. My number is always on, and I want you to reach out and feel free. You're not bothering me, okay? I'm going to also put it in the chat so you have it. There we go. Let's see here. Besides the down payment, how much cash should I expect to need at closing? Fantastic question. Okay. Besides the down payment, how much do you need or expect at closing? Always think about it like this. I would always say about 3% of closing costs on the purchase price. So if you have a $600,000 purchase times 3%, just think that in your head is 18,000. Okay. Not necessarily, but put that in your head, because the closing costs are let's see, they're determined widely by the transaction. So when your contract is being written, you get into contract, there's a lot of closing costs that are checked and marked on that contract. So it's really important to know and ask what those are, like escrow fees, title fees, transfer taxes. These are all considered closing costs. Lender fees are closing costs. So these are very good questions I have. Also, what are considered closing costs are what is called your escrow account, your impound account. And this is what a bank will require, depending on the type of loan, that you set aside property taxes and homeowners insurance aside in a special account. And so you would put that together, and that's part of your closing costs. Okay, so even though I say 18,000, I know it sounds like a lot, but it just adds up to everything that I'm saying. Not necessarily all of that 18,000 are actual fees on the transaction. Okay, but we would walk that through with you, line item by line item. You can also get 100% gift funds for a down payment if you needed to, and for your closing costs. You can also get closing costs paid for by the seller. So when you get into contract, or you can ask the seller to pay your closing costs as part of the offer. That's also really important. Okay. Let's see. All right. I think we are good. Well, everybody, do you have any more questions for me? Let's see here. Don't forget to like and subscribe, please, and share. You're very welcome. Thank you so much for attending, and I really appreciate it. I'm going to be doing this every Sunday, and hopefully you'll be back to see me with all these great questions. I love them. There's going to be a new topic each week, which would be good, right? So I'm hoping to have some more editorials to teach you guys any questions you have. All right. So I just want to tell you guys thank you. And I appreciate the time that you gave me. And I just want to check out, and make sure you like and subscribe. It means a lot to me. And the Mortgage Queen would like to say, now let's get you home. Thank you for coming.